Oil chaos is hitting the markets. We're going to break that down for you today. Before we get started, I do want to thank our sponsor, and that is iTrust Capital. You guys can go over there, buy, sell crypto, gold, and silver with your IRAs. Very easy to get started over there. And one of the things you should be doing is creating a distributed portfolio. And the way you do that, diversify your assets, look at ways to go into traditional, whether you want centralized exchanges or you like private custody, self-custody, or start building a crypto IRA. That should be one of the things on your checklist. Use our link down below. It does give you a little bit of a discount and gets you a $100 funding reward to get started. So let's go for it. I want to start with a couple of tweets here. This, of course, just in from Bricks News. I want to break down a couple of things that happened last night. President Trump says he knew nothing about the Israeli attack on Iran's South Pars gas field. No more attacks will be made by Israel pertaining to this, according to Trump. So he was upset about that. The next event, of course, is where Iran has struck back. They hit Qatar, and this is extensive damage on one of the biggest LNG facilities, which is Ras Laffan. This accounts for 20% of global LNG supply. This would be unbelievably impactful on the EU if this were wintertime. This may be because of the extensive damage. This may be impacting LNG into the European nations on all the way into fall and possibly even next winter. So this is a big deal and remember, this has just started, guys. All of this has just started. So we're continuing to see these energy fees and costs starting to rise dramatically. The Pentagon, though, has asked the White House to approve a $200 billion spending package for the Iranian war. That's more than the entire Ukraine aid, which was $188 billion over 3 years. And this is all in one single package. If you add that on to where we are today, that would put us at $250 billion. How does this play into where the markets are heading? One thing you have to look at is the price of gas. Well, there you go. From $2.79, now we're edging out at $3.84. We break $4 a gallon. That's a problem. You break $5 a gallon, that's a major issue. That's where we are right now. Gallons are going to pretty much control what's happening in the midterms, so get ready for that. If you look at crude oil right now, trading almost $100 a barrel, it did clip $100. It's the acceleration that you got to concern yourself with, is because it's a very short period of time coming off of half of that price. And here we are leaning into that. So we haven't seen this before since really all the way back in 2021, where it spiked almost 37% to that top right there. But it took some time. It took about 6 months. This is happening in a period of 30 days. So let's be ready, guys. This could continue to be a big issue. I want to go to a clip real quick because this will get into a little bit more detail on what Pete Hegseth is trying to do. Take a look.
$200 billion. I think that number could move, obviously. It takes money to kill bad guys.
When you look at that clip, you've got to look at one thing. Probably the issue that I'm most concerned with is he's talking about it could be more. And that is a problem. I think you're $200 billion in, you add that to what we've already spent. Now you're talking about major impact on the federal budget. Here's Ted Pillows talking about it. In my opinion, this war is no longer between the U.S. and Israel and Iran. This war is now about to destroy the Gulf's entire infrastructure, the infrastructure that powers half the planet. And I'm in agreement with that. When we showed the Qatar clip just a second ago, the fact that we've already seen 20% of LNG hit on this, and this is early. We're talking about less than a month on this stuff. So the imagined damage that could be in the GCC is huge. Right here, you've got the U.S. Now weighing military reinforcements for Iran, especially as we go into a possible new phase. That gets into a whole nother narrative if we actually put boots on the ground, which a lot of people have said, no way we'll ever do that. No, not a chance. I hope that is the case. If it is not, you can expect some things to hit. Now, here was a breakdown of some best case scenarios of how we could get out of this. Take a look.
Best case scenario is that 200 days from now, or roughly around Halloween, things are back to where they used to be before the bombing started. That's how disruptive the Iran war has been. and Iran's own oil and gas productivity and output has been bombed and is now shut in. And that's true in Kuwait, in Iraq, in Qatar, and a whole other host of these Arab-producing nations that either have tankers sitting in the Strait of Hormuz or just outside that can't move. This is not a snap your fingers and it's over situation. And the president is absolutely not acknowledging that. I, for one, am not heartened to hear Vice President Vance say this won't last forever. I would like some more clarity. They started off saying, maybe 2 weeks, then we got maybe 8 weeks from Hegseth, and now we're at not forever. That's not helping.
Yeah, I don't like that either. I don't like not forever either. One thing, but look at the trickle down effect here. You're talking about LNG, obviously crude. Now you get into helium, which is another cooling agent if you want to run a data center. And now you've got fertilizer being attacked. That, of course, is what most of the farming nations need. So you're starting to roll into a lot of supply chain that is critical, and it all seems to be centered out of this particular area. So that alone, and then if you look at Polymarket, 71% right now, it is starting to be somewhat, this is on all time, but remember, this was down around 68. It's holding still. This seems to be the timing is end of year. So back to that analyst, maybe she is right around what that is going to look like. I want to jump to another clip real quick because this one will go into a little bit about what Powell said yesterday during the FOMC in relationship to jobs. And I'll explain how this all connects to the market here in a second. Take a look.
But the implications of events in the Middle East for the U.S. economy are uncertain. In the near term, higher energy prices will push up overall inflation, but it is too soon to know the scope and duration of the potential effects on the economy. The thing that I think good number of people on the committee are concerned about is just the very, very low level of job creation. If you adjust what has been the trend job creation over the past, let's say, 6 months, if you adjust that for what we think, our staff thinks, is the overstatement due to overcounting, effectively there's zero net job creation in the private sector.
That is not good news. Zero net job creation. You've got it right here. These are the jobless claims based on data that is out. 205 actual, expected 215. Previous was 213K. So you can see trends are not going good for the U.S. in terms of jobs. Now, granted, there's still a lot of jobs being done, but what we're dealing with here is possibly a long conflict. Now you're dealing with supply chain pressures in the market, and you're dealing with the issues of an economy that's going to be facing higher inflation. So how does that play out when you look at this? Because many people would be looking, all right, well, how do you play this market? You've got gold starting to slip, silver absolutely cratering. Then you've got the S&P starting to turn over. We're starting to see a downline trend. And even Bitcoin, which we thought had a run, but has now traced back all the way into the 60s. So here's Mark Cudmore. He talks about how the market is finally registering. Take a look.
And I think the way this is kind of transpiring is probably the trajectory for the next couple of weeks in terms of that we'll go through periods of trying to be in denial or being optimistic and then have step shifts lower until we have clarity about the strait being, sustainably opened. And I just don't see how that clarity comes anytime soon. So I think what people are really starting to get, suddenly get kind of grasp is that the impact on some of the derivative oil products. What we're seeing in oil markets today is quite extraordinary because WTI, when I walked down to the studio, was pretty much flat for the day, and yet we're seeing Brent really surge higher. So that spread is absolutely blowing out at the moment, and I think it's really problematic for specific economies, specific sectors, apart from the broader wealth destruction we're seeing.
All right, so Cudmore's right. I mean, we are seeing the variations of the impact. And it's a rolling impact that starts to get into contagion effect if you go too far too fast, which is kind of where we are right now, a little too far and definitely a little too fast. The Bitcoin dropping 6% to 30% over the last 6 FOMC meetings. And of course, we could see a 6% taking us to 67. Where are we trading right now? 69. And then of course, if we go down 30, it could go down to 50. So let me know in the comments, where do you think it's going to go after Chair Powell's FOMC meeting yesterday, where he was basically not looking forward in terms of a good position around both jobs and inflation, which is the worst thing because that's what the Fed essentially is set to do. Poly market, Fed rate hike now starting to climb. Look at this, guys. I mean, we're talking about a 6% now to where we are today, all the way up here to 18% as of March 19th. So Fed rate hike is starting to get in the cards here. Remember, we've got two more, most likely, before we see Kevin Warsh come to the Fed chair. We don't know where Powell's going to be yet, but imagine if Warsh comes into a Fed where we are seeing spiking gas prices, rising unemployment, and rising inflation. There would be only one thing he could do. And if he did that, and that would be raise rates. If he did that, imagine what the Trump administration, this would be the first Trump administration Fed, at least on the second round. So, man, that would be, whoo, okay, Trump would, I think he'd go ballistic on that. Mohammed talks about it a little bit here, coming in from Bloomberg. Not good news for a market segment that is already challenged to separate signal from noise, let alone properly differentiate. What he's talking about is the fact that we're seeing private credit getting shorting. Yeah, this would be devastating, I think, to these markets. Let's jump to a clip real quick. This one is Chris Giancarlo. He talks about private credit and how it could work on blockchain, which might be a solution here. Take a look.
If in the 2008 crisis, we had financial cartography to be able to map all of the exposures, we would have known precisely what the real risk is in the economy. People are panicking right now about private credit. All right. Well, if all the private credit transactions were on a blockchain, we would know whether we've got reason to panic or not. We just don't know because we don't have that, that precision.
So that was Giancarlo talking a little bit about that. I don't know if that opens up everything in terms of fixing private credit, because we are in a big mess right now. How does this roll out, though? Is this going to go into the regular market? I think is the question. And again, sorry guys, just under the weather, still trying to get my voice back, so hopefully we get through this one. Data tokenized equities now surged from 100 million to 4 billion. This is since 2025. So look at that. Tokenized entities right now, or equities right now, continuing to climb. This is only going to get bigger over the next few months as we start to see things forward. And of course, the big news was the S&P 500 officially going 24/7 on markets. This is in with Hyperliquid XYZ. Huge moves here that I think start to change the markets for sure. Here's Trump, though, setting up what I think is the most important meeting that he should be having right now, with world leaders at least, and that is with Xi Jinping. And they have delayed this by up to 5 to 6 weeks. Now, what that tells me, something is not right with the war in Iran. Trump is trying to back away from this, and this could move out to 3+ months. If we go out 3+ months, things could get very nasty. Now, granted, he could spin on a dime and just say, oh, we're going to do the meeting next week. We decided to go there. If something changes for Trump. So be on the lookout. That right there would be a huge indicator for the market. Here's Ted. He hits it again. Iran is negotiating with 8 countries to allow passage through the strait. You've got a lot of conditions right now. It's on Chinese yuan, which is interesting. It's all about power, control the route, control the currency, control the game. I don't know that that will be much of an issue, but you are going to be dealing with, I think, a continued creative model of the Iranians and what they're going to be doing. So, and they're kind of tricky. They're kind of tricky. One other clip I want to get to, because this is China trying to compete with the U.S. in the crypto markets. Take a look.
When Treasury Secretary Scott Bessent, he was asked precisely this question around whether China might be using digital assets and blockchain to compete with the US. He acknowledged that possibility. And he actually said, I would not be surprised if they were building digital assets, potentially, backed by gold rather than the yuan, given how active Hong Kong is in the crypto space.
That in paper should make Hong Kong quite competitive globally. That being said, though, Hong Kong's still a very small market, and it still hasn't attracted the capital that the U.S. has.
Slam dunk, he's right. That is the case right now. They would have to explode into China. Beijing would have to get involved in a big way for it to even become somewhat close, much less the amount of access that you would have to open up to. So I don't think China's going in that direction. I'm still on the fence to whether or not they even want digital assets over there. Now, Japan met with President Trump. This is Takeichi. And, well, you guys listen to the clip. Take a look.
Why didn't you tell U.S. allies in Europe and Asia, like Japan, about the war before attacking Iran. So we are very confused about we Japanese citizens.
Well, one thing you don't want to signal too much. You know, when we go in, we went in very hard, and we didn't tell anybody about it because we wanted surprise. Who knows better about surprise than Japan? Okay? Why didn't you tell me about Pearl Harbor? Okay? Right? You know, he's asking me, no, you believe in surprise, I think much more so than us.
Yeah, I think that tells it right there. This is an ally, and it's a big ally in digital assets. So I just don't think Trump does not need to burn bridges. He needs to create relationships, get away from these kind of questions. Come on, PR guys. Let's do some work, Caroline.
If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.